Here we have a trial balance, and we are supposed to put together an income statement for the year ended December 31st, 2011. So, what is the first revenue account from top to bottom, going down through this list of accounts? What would be the first revenue account? And I'm hoping your answer is going to be truck fees earned, 134.5, which would be right there. And we're going to follow this up by the rest of the expenses that are going to be on this income statement, like depreciation expense trucks, salary expense 63,080, office supplies expense 6,500, followed by repair expense trucks right there 11,567. Total expenses will be 105,462, and when you subtract that from the total truck fees earned, or in this case total revenues, you end up with net income of 29,038. And that concludes this part of the problem. Let's go on to another part. Here I have another set of trial balance numbers and accounts, and on this one I'm supposed to put together a statement of owner's equity at 12/31/11. And that statement of owner's equity basically is the beginning balance of owner's equity plus things that increase it, like net income, minus things that would lower it, like withdrawals, and to come up with an ending balance of owner's equity. And the problem gives you the beginning balance of owner's equity, which is 168,737 at December 31st, 2010. So that really is the same thing as January 1, 2011, and this statement of owner's equity is for the whole year of 2011. So if it's for the whole year, then this is the beginning number for the owner's equity. So let's start off by capital at 12/31/2010 was 168,737. We got that number from above. Then we want to add net income, and this net income figure is something you've done in the past slide, which was put together all the revenues, like truck fees, and subtract out all the expenses, and all the expenses would be things like depreciation expense, salary expense, office supplies expense, and repairs expense. All those expenses would be subtracted from the revenues to come up with a net income of 23,713. This gives you a subtotal of 92,450, 192,450. You subtract out the withdrawals by the owner of 19,000, which are on here. Let's see, where are they at here? Looks like they're right there. Then you end up with the ending capital balance at 12/31/2011, 173,450, and you're finished with this part. Next part of this problem, you have a completely different set of trial balance numbers, and you could have a different set of them every time that you do a problem, but you have a different set of these numbers, and we're supposed to put together a classified balance sheet, and we're supposed to do it in the order of liquidity. And for the sake of this problem, so you can see everything that's going on, I'm just going to do the asset section on this slide, and then the next slide I'll do the liability owner's equity section. So here we go, part one, asset section. Start with the current assets, and again, these are in order of liquidity. From this list, we're going to have cash of 6,700. That's the first one. That's the first and most liquid asset, followed by accounts receivable, 18,500, followed by office supplies, which are right there, 73,43. That gives us total current assets of 32,543. Then we'll go on to plant assets, which would be trucks of 176, minus the cumulative depreciation on the trucks, which is 36,256, which is right here. Then we've got, this gives us a net plant asset number of 139,744. Then we have land, which is our next most asset in liquidity order, 45,000. Land was, where was that land at? It was right there, 45,000. Total plant assets 184,744. Okay, so total assets would be the total of the current assets plus the plant assets, which would be 217,287. and we're ready to go on to the liability and owner's equity section, which is part 2 of this same set of trial balance accounts. So current liabilities from this list would be, first current liability would be accounts payable, followed by, there's accounts payable, followed by interest payable of $9,000, and that's our total current liabilities of $19,700. Then we've got long-term liabilities, which do we have any on here? We have got one, which is this long-term notes payable of $55,000. That gives us total liabilities, that is the current plus the long-term, of $74,700. And the equity section will be, I've just got a number there, $142,587 for the ending capital, and that was arrived at by taking a little shortcut, which I'll show you about here in just a second, to come up with the total liabilities and owner's equity section of $217,287, which is exactly what the total assets were. So total assets were $217,287, and total liabilities plus owner's equity was $217,287. Now, let's see, how did I come up with that shortcut of the capital? Well, what I did was I took the beginning capital balance of $159,064 and added net income, which again I took the truck fees earned minus all these expenses like repairs, supplies, what else, depreciation, and maybe some more on there, and got net income of $20,523 minus withdrawals of $37,000, which are right here, to come up with ending balance of the capital account of $142,587. That's really not much of a shortcut, but it's what you'll have to do to come up with that, get that number. Let's see, anything else we got here? And then finally, from this problem, I've got a completely different set of trial balance account numbers, and I'm going to compute the current ratio. Current ratio is current assets divided by current liabilities. And let's see what we got. We have got current assets. Current assets will be accounts receivable, and I'm just doing them from the top down. They're not in liquidity order, but they are from the top down. So we got current assets first. Then the next current asset on this list, going from the top to bottom, would be office supplies, right here. Office supplies, $2,000. The next current asset on this list would be cash of $8,200. And let's see, anything else? That's all my current assets, $26,700. I'm now going to get current liabilities, and current liabilities from this list, going from the top down, would be accounts payable, which is right here, $12,200. Interest payable of $3,000. And do I have any more? No, I don't. So my current liabilities are $15,200. Current assets are $26,700. Divide the two, and you get a current ratio of 1.76, which means that for every dollar of current liabilities, I have $1.76 worth of current assets. And the ratio, well, let's see, normally 2 to 1 is pretty good, but for this problem it says the industry average is 1.5, so it looks like we're doing a little bit better than the industry average. So that's good. And that's the end of the problem. Long problem.